Hey traders, Raghee here, and in this free recap video, I'm going to walk you through what's a pretty good textbook example of the kind of day trade that I love to put on. Now, first of all, day trading itself is not a strategy. No matter what you may have been told, it's really an exit or risk management consideration. Day trading is just shorter term time frames, typically, with an emphasis on wanting to be flat by the end of the day, hence day trading. In fact, day trading was the first kind of trading that ever really existed back when Wall Street was literally just a big wall along a field. And traders would meet there and trade, and they'd go home flat, hence day trading. Kind of interesting history there. But what we try to do is we try to take advantage of the open, the time from the 9:30 bell to about 10 o'clock. And what we're looking to do is take advantage of the movement that we can see from the bell to 10, gauge that zone, first 30-minute zone, for what we call projected lows. Projected lows, which is based upon historical price movement, a proprietary tool that we use in the room, something that I use every day. I give you the levels, and these are trade alerts that go out. Well, today's trade alert was taking advantage of the support just above 26,400. It was what we call a first level buy. And that alert went out. And what it allows traders to do is look at that level, know why that level could be exhaustion, and put in a limit order to buy. So once you know what that exhaustion level is, once we've done the calculations and I've sent it out as a trade setup, I look at that exhaustion level and say, all right, well, let's put in a conditional order to capitalize on a move to that level. So exhaustion level, limit order to buy. And then ultimately what I'm looking at is movement to the upside after that. Now there's no way that I'm going to know what the movement up to the upside is. There's no way that I'm going to know that. There's no way that I'm going to say that there is, expectations for, hundreds of points immediately. But I do have a pretty good idea that if I position myself long near support and the market then starts to put in its typical price movement range for the day, I'm going to be able to find the higher highs. And in those higher highs, we'll have our profit targets. And that's exactly what we did today. But what I want to mention is be patient. I think a lot of traders look to get long right from the open, right from 9:30, or they look to get short right from the bell. And what I'm telling you to do is wait anywhere from 5 to 30 minutes. Wait from 5 to 30 minutes to let the market reveal where these levels are, or even where breakout levels are. So in the premium video, gang, I'm going to talk about the opposite side of a projected low, kind of the opposite setup, which is how do you take advantage of breach buys. So for those of you that have been curious how I take advantage of breaches, which is very much what we had on the S&P and the NASDAQ today, I'll talk about those setups in the premium video and walk through the specifics we need to see and some of the makeup in the market that we want to see before we put a trade on like that. What do the stocks have to look like? What are some of the market internals that are unique to a breach? What are the things we want to look for when we're playing acceleration through a level? Could be acceleration higher or lower. Today it was most definitely higher. I hope that projected low and patience, right? Projected low and patience. It's very much what got us long and kept us long in kind of a laggard market in the Dow. And then after that, we get to manage the upside, knowing that we didn't buy off a new high. I have a whole lot more latitude to take advantage of, not just stay in the market, but when you're long from here, think about the calmness you have as the market stair steps higher. And the reason I'm as calm as I am when I get into the market is I know I'm pretty much at levels that were lower, less likely, much less likely to see weakness through this area. Much less. I mean, it could happen. But the calmness comes from, hey, rather than buying a new high, I bought support. But buying new highs works under very specific circumstances. All right, gang, I hope this is something you could start to implement into your trading. Think about support and different historical price movement ranges. Once the market opens, give it 30 minutes if need be. That 30 minutes is possibly the difference between buying something at, say, 26,470 and buying something way down at 26,405, which is exactly what we did. All right, I'll see you in the next update.